So good morning again. We will start with our monthly recommendation. So first we have Tata Power. Current market price is 436. We are giving a first target of 490. Speaking about the company, they are one of the largest power generation company in the country. The largest NTPC. After that comes Tata Power and Adani. Comparing peer to peer, it's easy to compare it with Adani particularly. They are mainly into thermal power generation, but they play across the spectrum. They are into distribution. They have entered aggressively into renewable energy as well. One core difference between not difference, a disadvantage that the company has is last year their Mundra plant, one thermal plant, was shut down for almost 8 months because coal prices went up. And last result, if you are analyzing, around 800 crore loss was there due to the shutdown. So they are dependent on buying coal from outsiders. But for Adani and NTPC gets coal from Coal India. Adani, they operate their own coal mines in Indonesia and Australia. So this is one small disadvantage they have. But apart from this thermal power, they have their renewable energy sector has done very well. The result growth was very good. Top line growth was over 30 to 40%. And the company, so all the things that I've mentioned right now, it's all integrated together into the stock. Adani has got all their companies separately listed. Green energy is separate, port is separate, gas is separate. So for Tata Power, everything is integrated. But they gave a decent quarter result. It was much better than expected. And there is good momentum across power sectors right now. So this is a good pick. The PE wise also, it is cheap. It is only 37 compared to Adani, and Adani is valuing at much higher PE. Adani, they also have few regulatory issue from US. Some court ruling will happen there, and then the stock gets hit. So such issues are not there with Tata. Tata, obviously, they have a strong parentage in our country as well. Next, we have Healthcare Global. First target is 603. Target is 680. They're a small cap company. Mainly, they operate around 30 hospitals across the country. They're mainly oncology focused. Last year, a huge private equity player from US bought majority stake. Stake was exchanged from the existing parent. Share was exchanged to the private equity for around 480 rupees. Normally, private equities, when they invest in a company, they don't go very long. They don't care about how the company does over 15 to 20 years. They want to just make sure that the company boosts their sales in few years and they will exit after 6 to 7 years. That is normally their time frame. So, but valuation wise, see, the company's PE is around 345. Company is not it's not at an attractive range in any context. Valuation is high, but mainly because the private player has entered, and apart from that, their margins are also looking good right now. The capex that they have done over the past 3 years, they should all mature. So we're expecting a good year this year. So we just wanted to inform you about this. Valuation wise, it is not very attractive. So that risk is always there. Then we have Anup Engineering. Current market price 2,161. First target 2,420. It is a heavy electrical engineering company. They're mainly focused on heat exchangers, vessels, and other high grade engineering products. Mostly their heat exchangers are used across petroleum sectors. So last year, post the tariff news, the order intake was less for them. Their current order book is only around 550 crores, which is not that great compared to what their revenue is. After the tariff and particularly after the Iran war, their last quarter's order intake was less. So the management is expecting good orders to come in this quarter. The result is yet to come, but otherwise the company has been doing well otherwise. And heat exchanger, most of these heat exchangers company are trading at a very high PE right now. Their heat exchangers are mainly focused on petroleum sector, but other company which came recently, KR and heat exchangers, it came last year at around 700. Now it is trading at a PE of 136. We can't really compare their products apple to apple, but still, in general, the company almost belongs to the same value chain, and their PE is only around 37, which is an attractive valuation right now. Most of similar companies have already gone up. So looking at the peers, they are at a good range right now. Next, you have Star Health. Current market price 520. First target is 590. So this is a company that did very poor last year. Last year, in the name of medical inflation and health inflation, most of these hospitals, they are charging extremely high fees for charges for whatever treatment that you're going for. So because of this, for a company like, for a health insurance company like Star, their claim size is becoming more. So when claim size is much higher, they will naturally incur a loss. Apart from that, one advantage that they have is looking at the past quarter numbers. Recently, around last week, their results came out. They are profitable. Last year, they were not. This is mainly because GST was cut for health insurance, for individual insurance only, not group. For individual health insurance, GST was cut from 18 to nil. There's no GST right now. So because of this, they are slowly improving. We still have to see. Management is saying that around 80% of their products will have price changes. So whether it is positive or negative, we will have to only see. But apart from that, as a sector as a whole, we are seeing little recovery. We still have to see. Their high was almost, I think last year high was almost 740, 750. From there, it has corrected a lot to almost 520. This year, quarter result was good. Niva Bupa came yesterday. That was also okay. In general, health insurance companies are giving decent result. And finally, we have Hikal. First target 210. Sorry, current market price 210. First target is 240. We gave Hikal as our conviction idea last week. The company, they are they are into animal health, they are into pharma and crop protection. Their core business is pharma. They manufacture APIs, which is active pharmaceutical ingredients, which are small ingredients which are required to make drugs. And they are also into CDMO business. CDMO is a business where they take contracts from other people, they manufacture drugs for them. So CDMO is a high margin business. Apart from this, their animal health is a comparatively small revenue dependent business, not really relevant. The company had a lot of issues in the past. Last year, they had they had a notice from US FDA for one of their Bangalore plants. Apart from this, there's a promoter feud between Kalyani family and Hiremat family, which is their promoters. So because of this, company has not been very efficient in terms of revenue generation over the past few years. But last 3 years, the company has done a lot of capex. So all that should bear fruit from this year onwards. The family feud and the promoter issue part looks like it is getting sorted. Recently, court has also intervened, and we are expecting that this year it will get sorted. Apart from that, in the past also, they had few environmental issue with the pollution control board as well. So we are expecting a turnaround this year. Valuation wise, it is fine. P is 105, but still for a company of their size, it is okay. I won't say it is fine, but it's okay, not that great. And looking at last review, we did very well, except Pfizer. Pfizer, we are waiting for result, almost the same range. Sharda Cropchem result was good, but I think 2 weeks back it dipped a little, but again it has recovered. It is still going strong. So those who want to enter Sharda can still buy. One of our top picks was Vidya Wires. We gave it for 63. It went up to almost 97. The target we gave was 70. Vidya Wires buying now, we will not really recommend because we feel the margin of safety is almost over for the stock. But still, I think it is still trading around PE of 40, 45. We'll have to check for that. PTC also did very well. PTC was also one of our conviction picks that we gave last time. It has also achieved target. So 3 of them have achieved. Kirloskar also gave good results, and the stock is recovering well. Okay, thank you.